this tutorial, I will endeavor to decipher daily market news roundups, and I will lay out the steps that I take to generate trade ideas. I will use ft.com as a primary resource. The global market overview articles on the Financial Times page update several times throughout the day and commence with a roundup of all the trading sessions. That is Asian, European and American sessions. It serves two purposes. 1. We gain insight into the main daily stories and what moved the market. 2. We can gauge if those stories will continue to play out and dominate price flows, or if they have matured and have been fully priced out. Headline reads: US North Korea tensions fuel flight to safety. It is Wednesday the 9th of August, 21 o'clock, British summertime. What you need to know: dollar falls 1.1% against Swiss franc and gold hits 2-month high. US 10 years treasury yield touches 6-week low. S&P 500 trims decline to close fractionally lower. South Korean stocks on one retreat. Oil prices choppy after inventories report. So what was evident for that article was that there was a clash between the leaders of North Korea and United States, which created a little bit of tension in the region, which also fueled franc buying and gold buying. It was noted that investors didn't usually in the past take the North Korea threat very seriously, but now with North Korea's military capacity suggests investors may be more cautious, which in turn means that that could support further upside on gold on the back of this story going into the next session, which would then be the 10th of August. Moving further, the article also talks about the effect it had on indices, which was pretty much limited. Interesting view here: if tensions between the US and North Korea escalate further, we think that the implications for equities in South Korea and elsewhere will remain limited, provided that war does not actually break out. This was the case for US equities during the 1962 Cuban Missile Crisis, when the world arguably came closest to outright conflict between two nuclear-armed powers. So that basically tells us that it's going to have limited effect, whatever is happening now between the escalation between North Korea and the United States. Stock market holds up pretty tight until you actually have a war. They're keeping up pretty good. Moving forward, the article also talks about why it's safer to buy franc in the case of a North Korea escalation, as Japan would be close in the region and could be exposed to projectiles. So going on the back of that, the trade is very clear for the next session. We've got gold hitting higher, so ideally we want to buy at the daily high or buy on the inside bar breakout from a 4-hourly or a daily. On the USD CHF, I would like to sell at the daily lows, or ideally again at the inside bar break, or any other PA that offers a good entry with a good risk management. So let's have a look what it all looks like on the charts. You would have found yourself at this 4-hourly candle here upon finishing reading that article. And what I always like to look out for when I realized what I want to trade, when I'm confident that I know where they've read the flow correctly, when I pull up the charts, ideally 4-hourly or daily, because that just consumes less time. What I always like to look out for is where am I in terms of price. So it's very evident that the spark of the escalation here, gold higher. Also see that I've taken out the latest highs, which is ideal, and closed above it. That's always a plus. With two consecutive inside bars over here. So we already broken out of the inside bar, which in other way could say you could enter at market price because you're already in the momentum there. Conservative way would be just pop the tops here and keep your risk management somewhere at these latest squeeze points. Further down, it was evident that we would have called the daily flow correctly. You had all the free trading sessions in your favor and available to you to take your profit. Next one, I'd like to have a look at USD CHF 4-hourly chart as well. There's already one thing very, very clear, that you had a supply imbalance over here. You broke out and then created this massive 4-hourly inside bar. From my experience, there is a couple of ways to trade such a congestion. You know where the flow is headed. Downside pressure is evident, so you're looking really to pop these lows here. However, for whatever reason you trade back into that supply zone, it is all go to short further and attacking these lows. In any other case, you'd be looking for PA, either fake outs inside there or anything that could get you onto a trade. Again, the 4-hourly chart is really time effective, so it allows you to just check the charts a couple of times a day and then make a decision based on the analysis. It was further evident that down in the London session, which is quite a volatile session, you had a fake out of these highs here, so here and here, which gave you the opportunity to place a sell order right up on a break over there by keeping your risk management somewhere behind these points here, depending on your risk appetite, and trying to attack these lows here or just hold out as long as the incentives hold or the trading sessions. Further was evident that you called again the flow of the day correctly. You could have pocketed anywhere between 30, 40, 60 pips.